traders, welcome to the TMT Stock Market Strategy video for Wednesday, July 20th. Well, another inside day. Markets are consolidating at the upper end of the range. Really, we had no movement in gold, metals, crude oil, and the equity markets, and bonds for that matter. We really didn't move much at all. And that's telling me that we have energy, again, still building. And we're going to have an explosive move one way or the other, and we're going to try to figure this out as far as what our technical view is telling us. What's the charts telling us here? So I want to go through a couple of indicators, and I want to show you a couple of things, that some patterns that we found. I've showed them to you before, but I want to I made them more pronounced on the charts to make it real clear. Now, remember what I said. The markets could go to 2200 in a heartbeat, okay? We do have inverted head and shoulders patterns. I showed one in the Qs, but I wanted to show you one in the S&P that does measure to 2200. Now, we're consolidating at the upper end of the range. And yes, are we still overbought, meaning that price ran up for 11 out of 13 days? Yes, of course. But what's happening is a lot of the overbought readings are unwinding. So that's creating energy. And I do believe that it is possible that the markets can rally to 2200 before topping, giving a local top where we see that pullback that we're looking for. Now, that's what I mean is just a pullback. I do believe the bigger move is to the downside, but we come into some seasonal weakness now until October. So it could happen at any given moment. It could happen any month between now and October. No one really knows until price starts to make bearish symmetry. And what I mean by that is lower lows and lower highs. Right now, it's not doing that. It's just consolidating. So you do not want to be aggressive in your trades. You do not want to anticipate long or short trades, because right now, neither is telling us. Right now, it's just pausing. So we want to let price run, whether it be to the upside or to the downside, and let's follow what price does, and then you put on your trades. I want to just show you the CPC, equity put call ratio, and as you know, this is still bullish. When you get overly bullish, that's when you have to be careful. But we're right now back to this, basically this mean here, okay? And keep an eye on what I'm telling you now. This is right here to the mean. We're not overly bullish, but yes, the sentiment indicators are still screaming buy, overly bullish, okay? Now let's take a look at the McClellan Oscillator. Now here's where I'm making my point here. We are now back to 17, which is just about neutral. We have a neutral state, which is 0. We're at 17. We were at 60, right? 70, 80, 90, 100 is extremely overbought, and that's where we were looking for some sort of a market top and or a market low when it gets down these levels. So now we're at 17. Interesting, right? Well, let me show you another indicator, okay? And this is the NAMO. This is the McClellan Oscillator for the NASDAQ. Look where it's at, 15, when it was at 70. Okay, and where did the where has the Qs gone? Nowhere. Okay, they just I'm going to show that to you on the chart itself, but it has gone nowhere. Where is the VIX? VIX breaking new lows, and I've gotten many emails. What do you think? You think we should look to get into the VIX? Is not on a buy signal. It's getting close, but it's not on a buy signal. Stay away from the VIX until you see a big spike lower, 1 or 2 days, and then outside of that Bollinger Band, which is starting to curl back up. And if not, it's not to be traded, at least to the long side as of yet. It will be, but it's not. You're going to get at a better price. Leave it alone. We have no positive divergence here in any of the indicators, as you can see. So to me, I stay away. Do I pay attention to it? Absolutely, but I'm not trading it until this gets me a better buy signal. And of course, we'll get it out there to you guys. Here's the VXX, which I would like to trade. There is no positive divergence here. Yes, there's high or low. We need to see the RSI curl, MACD curl back up again. And right now, Bollinger Bands are starting to curl in a little bit. Still needs a lot more work. All right, so this is the current level. You could see a 10 handle print any day now. Okay, and if that does happen on big candle volume and large candlesticks, that tells me I'm waiting for that reversal, and then that's when we would buy the VIX and sell the market. Right now, it's still on a buy signal for the market, a sell signal for VIX, okay? And as you guys know, oh, by the way, I got a lot of nice comments from you guys. Thank you very much on this chart and the videos. I really appreciate it. And those of you who really find this helpful, check out the premium video for $49. It's out of sight. And also our dark pool trading room, which produces our proprietary trading program, produces some fantastic signals intraday if you need a little guidance. So anyway, as you guys know, you see the symmetry here: 14 days, 11. Look at every time it goes away from the 21, bam, it comes right back up again. Same thing here: 13 days, 13 days. Well, now it's 14, but look what's happened. We had 4 days of really no movement in the market at the upper end of the range. So what does that tell me? Maybe a day or two down, small little flag, and I think we go back up to the races, back to the 220, which would be the 2200 in the ES. Okay, that's possible. Now I want to show you something else here. Here's the 60-minute chart. Remember I mentioned positive divergence. Well, what's happening now? It's more pronounced. Actually, it's unwinding the overbought reading in the S&P. Okay, so we're just sitting here for 4 days doing absolutely nothing. Actually, for 1, 2, 3, 4, 5 days, we've had inside days. And what's happening now? Our overbought state, giving us negative divergence here and here, is now unwinding. So that, to me, you have to use caution on any shorts at the moment, because it is possible that the markets can actually start to pop and up, move out of this range from here. Why? Here's a 30-minute clean, just price and Bollinger Band. It doesn't give you the direction, but you have to be careful here, because it could go either way. So what do? You wait until price breaks out or breaks down. And this is building energy here. You can see this. When the Bollinger Bands get really, really tight like this, it starts to expand. And then that's where the price will tell you which direction it wants to go. So quick recap from what I just showed you. We have negative divergence, which now is unwinding the overbought reading in the Spider 60-minute. We have the equity put-call ratio, which is not extremely overbought anymore. We have the McClellan Oscillator and the NIMO, which is now was reading overbought, which is now giving us a neutral state. So what is that telling me at the moment? Now anything could happen, but the market is resetting itself to go higher. Okay. Remember, news trumps the charts. We got oil. We got ECB announcement on Thursday. Big risk events. So that could change. But I'm just telling you, I do think the markets are ready for a breather. I'm thinking maybe we get a few days pop. Maybe we rally into the end of the week, and next week we start to get the rollover, or we could just go over tomorrow. And again, I'm only showing what I'm telling you guys, what I am looking at and seeing from the charts. It seems to be the market is starting to reset itself, but this is the negative, and I've showed this before. And I'm not a Dow theorist, but the Dow theorists have to be cautious here. We made new highs in the Diamonds ETF, the Dow Jones, and now the transports are not doing it. Yes, it's flagging, but this is a big concern and a big red flag. Until we take out these other two swings and challenge these swings, the market is extremely vulnerable for some downside action. Okay, just keep that in mind when you look at this video. All right, and here's the transports, and I'll look at the transports, and you can see clearly we have negative symmetry. We have lower lows and lower highs. Okay, and now here we just popped up, creating a small bull flag. Now that is a good sign, but it needs to start playing catch up to the other indexes. This is our leader. Okay, and you see a pronounced bull flag here. So this is our leader, and we want to see the leader lead, and it's not really leading. So at the moment, this is definitely something to be watched. Because this is something that if the transports do not break higher along with the markets, you're not going to get a big rally. You might get to push to 22, but I think that'll start to fail as well. Okay, and here's a sample of the premium video that we put out. We do all of the indexes. We do gold. We do GDX, the gold miners as well, and of course crude oil when the time is right for crude. I don't like to put things out there if I feel like the trade is going to be a little difficult. So I just show you these levels, and again, it's up to you to decide where you want to go. But you can see I've been showing you this for quite some time, and this has been holding true for now. So those are the levels that are still acting as resistance. Okay, and then lastly is the Qs. You have Qs daily at 115, and I want to show you the 15-minute chart, one of the 15-minute charts, which we show you on our premium video with extreme levels. Okay, this is the 15-minute chart of the spiders, and here is our expansion of all of our levels, and this is what you get in the premium video. And here's our inverted head and shoulders, and the target is 222. 222 is the target from this inverted head and shoulders, and it has triggered. Okay, So it can rally up to here, guys. I am not saying it's going to. I'm just giving you the pattern, what I see, and if it does take out this high of 216.85, I believe that we're off to the races and we'll hit that target. I know it sounds insane, but it is what the market is, and we have to trade what is not our opinion. Okay. Now, if we start losing some of these areas here, okay, some of these support areas, then I do believe that the markets are done going up, and at least we would test the back to the 210 area, okay, which would be the neckline of the inverted head and shoulders. All right, guys, I hope it helps. Check out the premium video. This is what you get. Not only that, you get a whole bunch of other stuff of some tradable, actionable areas that we put based on our algorithm that we give you, and they're very highly actionable, meaning that they do hold the price. Okay. Hope it helps. Have a great day. We'll see you tomorrow, guys.